In this video, traders, we're going to look at how to avoid trading on impulse. Stay tuned. Hey guys, very warm welcome to you. Thank you for joining me. All right, so how do we avoid trading on impulse? It's a big challenge for many traders. Why? Because you're sitting in front of the screen, you see something, we feel compelled to take that trade. We feel compelled to get into the market. And actually, we know what, that's generally detrimental to our long-term success. If we're trading on impulse, we're not trading clearly, we're not sticking to a plan. So this is for you if you're a kind of trader who just trades on impulse. You see something, you think you've got to take it, you use a market order, you get in straight away. Maybe you can add some of these into your trading plan, into the way that you trade, to kind of reduce that. Because I think if you're honest with yourself, you look back and you go, you know what, trading the impulse never really serves me. I never really get good trades out of trading impulse. Of course, you're going to get one or two, but if you trade on impulse all the time, you think if you extrapolate that out, you'd be profitable? Probably not. Anyway, let's get on with it. Number one, be aware of triggers. So what do I mean by this? So there's going to be something that causes you to trade on impulse, and that generally can be something like extreme volatility. The opening bell if you're trading something, so the open goes and you're like, I need to trade immediately now. Mondays, we talked about Mondays before on our many videos coming up. If you haven't yet seen it, guys, make sure you subscribe. If you want to use the notification bell, you can do, although mute it during the trading hours. I don't want it going off in the trading hours for you. Last thing I want is to be putting you off your trading. Anyway, the trigger is going to be something like volatility, something like an extreme move, something like maybe FOMO from a trade you've missed. Whatever it is, be aware of those. Number two is have a checklist. So simple way to avoid the impulsive trading is to have a checklist. Now, I appreciate it's another thing to stick to that checklist, but if you start to get into the habit of doing that checklist consistently, things become easier for you. So you have a checklist that says, hey, what's the 15-minute trend doing, for example? Where's the high? Where's the low? What's the price action recently? What's coming up? What am I waiting for? Whatever you have in your checklist, you have to be a kind of A4 sheet with reams and reams of kind of data points. But what it does, it just pattern interrupts you. It stops you. So you go, right, let me check my checklist. Is this setting up? Is it outside of the range? Is it this? Is it that? Is it basically adding enough weight to be able to, for you to take the trade? Is it actually the other criteria being met, should I say, for you to take the trade? Number three is to create a set of filters. So very similar, but I like to use a filter and a trigger process. So I like to look and see a set of filters, the market conditions generally, or recent price action, or where are we relative to prior highs, or where are we in the day, or any of these things. That's my filter. And then my filter then goes through and I have a trigger, and the trigger is the actual setup, the actual kind of candlestick pattern sometimes, or the price action pattern on a very short-term time frame that allows me to take the trade. But no trade will trigger unless it comes through the filter. And why do we do this? Well, we'll do this because I go into much more depth, by the way, on the program, price action program, guys. If you want to check it out, if it's something you're interested in, go and have a look. But the reason I do that is so I don't want to be just taking constant trades in the middle of nowhere. If I see a pin bar, it's like, oh, it's a great pin bar. If I see a little fake out, oh, it's a great fake out. But if it's in the middle of no man's land, in the middle of a range at lunchtime, it's meaningless. If it's after a good drive through a major support, etc., then I want to take it. So a filter and trigger process, and having that set of filters stops you trading on impulse, because you're like, well, the filters they're not green. They don't have 3 green lights to say go. I can look for something. I'm not even in the filter criteria yet. So that helps, again, stop you just diving into trades. Fourth thing is journal at the end of the day. This helps you discover your triggers. If you're writing down your journal, you say, do you know what? I took a bit of an impulsive trade at the open. I took a bit of an impulsive trade towards the close. I took an impulsive trade the moment I sat down at the screens. I took an impulsive trade when I saw a big spike in price. You start to recognize your habits, and then you can see what your triggers are that make you overtrade, or make you trade on impulse, make you want to make a trade. There's normally a set of them, and then when you can be aware of them, you can preempt them, and you can be kind of off the throttle a bit and be a bit cautious when they start to set up, for want of a better word. Number 5, guys, is build confidence in your strategy and plan. There's no substitute for this, and this is the kind of final piece of the puzzle, if you like, because if you can have confidence in your strategy, if you have confidence in your plan, you won't feel the need to trade on impulse. You think about the real root of the reason why you're trading on impulse, it's because you want to make a quick trade. You want to make some money now, and you don't trust the fact that your plan is going to steer you through the choppy waters to the other side, to profitability. You haven't got that confidence in it yet. And I get it. You know, if you're starting out, or if you're just kind of getting some traction, you've got no reason to have confidence in it. You've got no experience, but that comes with time. That comes with just trading the plan and saying, hey, you know what, I'm just going to wait. I'm going to act like a professional. I'm going to wait for my setup. I'm going to wait for my opportunity. I'm not going to just trade on impulse, because that's what the majority of traders do, and the majority of traders are losing, and I want to differentiate myself from them. So one of the things I'm going to do is I'm going to stop myself trading impulse. I'm going to have a checklist. I've got a filter process. I'm going to journal my trades, and I'm going to build confidence in the strategy that I've got. It's going to steer me through to my destination. And guys, if you like the video, appreciate your thumbs up. I appreciate your comments, support, subscription. And don't forget to check out our channel sponsor. Links in the description below. 3 links normally down there, guys. Channel sponsor. We've got Traders Mastermind. And if you want to join us in that great community of traders, do live calls, Zoom calls, great Slack community as well, and the price action program for you. Any of those 3 you can check out, or stay subscribed on YouTube for free, of course, for more videos. Take care. Bye-bye.